The Gartland Group presents Taxes, the IRS, and You with your host, Bernie Gartland. Taxes, the IRS, and You is a different kind of show that'll help you solve your tax problems. As former Deputy Attorney General of the state of Delaware and with over 25 years of experience as sole practitioner in both Delaware and California, the name Bernie Gartland has become synonymous with taxes. And now your host, Bernie Gartland.
Hi, everybody. Bernie Gartland. The name of the program is Taxes, the IRS, and You. And we like to say it's kind of like a crazy, diversified, eclectic time of show. And today, we're going to have as our resident panel expert, Dave Wiesen, who's a tax attorney with Gartland Law. And we're going to talk to you about what I call the Big Four. The Big Four: J.K. Harris, Ronnie Lynn Deutsch, Tax Masters, and American Tax Relief. Now, I know that you have seen their national sales organizations commercials across the United States for years. And for years, I've been telling the IRS that these people were rip-offs, and it takes a long time to get to a point of time when somebody gets to investigate and then finally close down. About 3 years ago, because I felt that the Big Four, J.K. Harris, Tax Masters, Ronnie Lynn Deutsch, and American Tax Relief, were giving out what I considered false, fraudulent information and also not performing as they should have done legally or even morally. I produced a 3-segment DVD called The IRS Solution. Now, if you go to gartlandlaw.com, you go to my website, gartlandlaw.com, you will press a button there, and this will come up. The IRS Tax Solution will come up, and we charge for it. However, we're not going to charge you for it. All I want you to do is send me an email at gartlandlaw.com. Bernie at gartlandlaw.com, Bernie at gartlandlaw.com, and ask me to send you for free the IRS Solution. And the reason for that is we're going to show you what went on in the past, and we're going to show you what's going on now. And in this program consists of 3 different segments. The first segment, second segment, third segment. The third segment, I'm going to tell you how you need to be a little bit concerned and wary on what is being presented on television right now. So I want to introduce you to Dave Wiesen, who's a tax attorney with Gartland Law. Dave, say hi to everybody.
Hello.
Okay. Now, we have J.K. Harris going out of business. Tax Master slapped with a $195 million fraud judgment. We have J.K. Harris defaults on another class action. We have Ronnie Lynn Deutsch out of business, closed down by the Attorney General of the state of California, and she's got multi-million-dollar lawsuits. I think there's one lawsuit for $34 million against her. What was going on with these organizations, what I call the national sales organizations, making millions of dollars? What was going on with them that eventually the government got hold of and closed down and are prosecuting?
Right. Well, there's several levels of things that were happening. One is that false claims were being made in commercials, such as you can settle your tax obligation for $20, or
that was Ronnie Lynn Deutsch, wasn't it?
Yeah, or you don't have to pay a dime to settle your tax problem. So the false claims. Another thing that was done was contracts that were basically traps. You get the client to sign an agreement to put amount of money down and then make payments over the course of time. The law firm doesn't do the work. The client stops paying the money, and then the law firm basically threatens the client and says, "Hey, now all your money is due on that contract." What else did they do, Bernie?
Well, they didn't do their work.
Yeah, not doing the work.
They just didn't do the work. And you know, it's very interesting that you point that out, because we've talked about this a lot. It was my impression for years, and I've tried to tell the authorities this, that these major companies entered into contracts. I'm going to speak very slowly because I want the people to understand what I'm saying. They entered into contracts that were set up for the client to breach. Wait a minute. Everybody enters into a contract to fulfill it. No, they didn't. My opinion was, because I saw it time after time after time, when finally the client saw our commercials or word of mouth or phone book ads, whatever, to come in to see us, they would come in and say, I could never get in touch with the person. I could never get in touch with the person. And they charged me $6,500. And I gave them $3,000. That's all they wanted. They wanted $3,000, and they wanted me to pay them $250 a month for the balance. And I said, well, what happened? He said, well, I couldn't get in touch with them. Somebody said, well, we'll get back to you, or all of this gobbledygook. And I said, well, what did you do? He said, well, I stopped paying them. I said, that's exactly what they wanted you to do. In fact, one guy called up and he says that the person assigned to his case was on a leave of absence. A leave of absence? Well, who's working my case? Well, nobody, because he's on leave of absence, okay? Well, this is crazy. I said, so what did you do? I stopped paying my money on a monthly basis. And what did they do? I could have told them what they did because I knew this from past performance. These companies would send a letter to the client and say, since you did not send in your monthly payment, you are in breach of your contract, and check paragraph 501-8, and we no longer represent you, and the money that we have received is money earned. Goodbye. The whole intent was to create a contract for them to breach. Now let's talk about another area. The other area is that these national organizations, the four that I'm saying are no longer in business anymore, they would try to get people to think in terms of offering compromises.
Right. Basically, one size fits all, cookie cutter. Just whether your situation called for an audit, or whether it called for an installment agreement, or whether it called for a bankruptcy, they would say, we're going to get you an offer in compromise, because wouldn't you like to pay pennies on the dollar?
Right. And that's the phrase. The IRS, by the way, it takes great umbrage at that expression. Pennies on the dollar, pennies on the dollar, pennies on the dollar. There's no such thing as pennies on the dollar. An offer in compromise is based on data's collectability, and you have to qualify. What happens is that these organizations, they didn't care whether you qualified or not. And they would take their money, and if they were to proceed, if you got to a point where you didn't breach your contract and they proceeded, they get turned down. They get rejected by the IRS because they weren't done correctly.
Right, and then say, if you want to pay more money, we'll take it out to appeal.
They say, give us $2,000 now, we'll take it to appeal. It was totally a rip-off situation to get people to hire them to do nefarious things like offer and compromise that didn't work or breach a contract. And by the way, something you and I talked about a lot. These people always disclaimer that they were not attorneys. We have a disclaimer. We are not attorneys. By the way, on the power of attorneys and everything, it shows that they were attorneys, but they said, we are not practicing law. We are just representing you, so they're not attorneys. So, Dave, the client never got a lot of options because if they're not attorneys, they can't practice law. Therefore, there was no intent to solve somebody's problem. Now, ladies and gentlemen, when we come back, we're going to give you an actual case. Brian Bauer from American Tax Centers is going to join us, and we're going to give you an actual case of what tax masters did to somebody. And by the way, I called the Attorney General of the state of Texas on this particular case. So when we come back, we're going to talk about a case that'll show you exactly what these rip-off people are doing to you. See you soon. Hi, folks. I'm Bernie Gartland, and I'm so proud to introduce you to the Gartland Group. Do you have a need to have your current or prior year tax returns prepared? Is the IRS knocking at your door and you need legal representation? Do you need professional bookkeeping services? The Gartland Group can help. Let us put control back in your life and have that control give you a future.
Call today for a free consultation. 760-345-1500.
If these 4 areas are controlling your life, let me show you how through either a Chapter 7 bankruptcy or a Chapter 13 bankruptcy, we can put control back in your life and have that control give you a future. Call me today for a free consultation.
Got nervous.
Hi, everybody. Bernie Garland. The name of the program is Taxes, the IRS, and You. And we are joined by Brian Bauer, who is an enrolled agent and who is also the CFO of American Tax Centers, and David Wiesen, who is a tax attorney with the Gartland Law. And we're all part of something called the Gartland Group, which you're going to hear a lot about, much more than even today. Dave and I were talking about the rip-off firms, J.K. Harris, Ronnie Lynn Deutsch, Tax Masters, and American Tax Relief. And I told you all about this DVD. There's 3 DVDs in here that you can watch, and it's called The IRS Solution, All Your Tax Problems Solved. And Dave, we have this for sale on our website, but we're not going to sell it. We are going to give it away to you. All you have to do is send me an email at bernie@gartlandlaw.com and tell us you want for free the IRS Solution package, and we will send that to you. And one of the things that we didn't cover, by the way, is that we were talking about, just at the close of the first segment, Dave, that the fact that the national sales organizations, even the ones that are out there now, okay, that haven't been closed down, cannot give legal advice. Right. So they don't give all the options, okay? So what happens is that one of the major options is that taxes are dischargeable in bankruptcy. They always have been. By the way, if you folks don't believe it, go to Section 507 and 523 of the Bankruptcy Code or call the IRS up. They're the ones that taught me how to do it in 1988. So they may be just fiddling around with your money and not giving you options because they cannot give you legal advice. They're not attorneys. Okay. Brian, the reason I've asked you to join us is that I want you to tell me this is a form. Okay, and this is called a CP 2000. What is a CP 2000?
Well, what it is when you do your tax return and you have left something off inadvertently, not on purpose usually. You forgot you withdrew $2,000 from, say, a retirement account. What that is they'll send you a letter out. It's called a CP 2000, and they'll say, hey, we think you forgot to include the $2,000 you withdrew from your retirement account. You owe an additional $400. If you agree with that, sign this form, you're all done. Don't need to do anything else. You can pay the $400 off, or you can enter into a payment agreement to pay it off. That's all that letter is.
And if you don't agree?
If you don't agree, you have another option. You can check the box, say you don't agree, and specify why you don't agree, and send the documents in to support your position, and they'll hear you out.
And you know, the CP 2000 is a marvelous piece of correspondence from the IRS because it gives you the opportunity to look at what they're saying that why you owe.
And if you don't agree, it gives you the opportunity to show why you don't agree.
And you know where we get this a lot? In identity theft. So if they are saying, we got a 1099 or a W-2 that you didn't report on your income, you can check the box and say, I disagree, and tell them why.
Or sometimes it's something simple like you're divorced and you claim the kid and your ex-husband claimed the kid before you got your return in, and they're disallowing your head of household.
Right. And what's really neat, too, is that when you get the CP 2000, they just don't say that you failed to report. They show you who it's from. Like, for instance, here's one for over $40,000 on this CP, on this particular client. This is a real client, ladies and gentlemen. This is a person that came to see us. Over $40,000 withdrawal from, it's a capital income builder, American Fund Servicing Company. And when he came in to see us after the fact, we said, well, did you receive this money? Yeah, I just forgot to put it in my tax return. Okay. So, but what happened is the reason why we saw this individual was that he came into us because he went to Tax Masters. Okay?
Right.
Now, what Tax Masters does, and by the way, I go back to this IRS Solution, those guys are the reasons why we put together this DVD, because I got tired of
Bernie, do you want to give a caveat? You know what happened on Groupon? The woman said that she was going to give a whole bunch of brownies.
Yeah.
Do you want to give these to the first 50 people that call, or do you want to give them unlimited?
Unlimited.
Okay.
Unlimited. That's what we do here. So anyway, this gentleman goes to Tax Masters, and Tax Masters gives him $3,000 to do something. Now, what did they charge him to do?
Evaluation of an offer and compromise.
Well, first of all,
Bernie, tell him how much additionally he owed to the IRS.
It total because there was another item on there that he forgot to put in. It total of it was about $9,000 some odd dollars.
Right.
Okay, that he would have owed had he agreed to it.
And
he showed us that I got that money and now I owe this tax. But Tax Masters, after they were retained, said we have completed an analysis of your IRS account. At the conclusion of our recent investigation, we were able to determine that you do not owe the IRS at this time. Duh.
Which is true.
Which is true, because this CP 2000 is only a proposal that if the information that we, the IRS, send to you is accurate,
then you do owe that.
Then you owe the money.
So it's like, we think you owe this. If you agree, then it becomes a bill.
So Tax Masters charged him $3,000 to do an analysis.
To tell him what.
Okay, and then they say, however, it is determined that your 2009 tax return has an open examination that has not been assessed. Double duh.
Yeah, that's right. That's what the CP 2000 means.
That's what this means, okay? And says, once your examination is closed, you should receive a balance due notice. Upon receipt of that notice, please give our office a call, and we will proceed with your case accordingly. There is a chance that we can settle your case for less, okay? Now, they charge him $3,000 to tell him that he had an open examination, that he hasn't been assessed.
Right.
But wait till you get assessed. Oh, by the way, thank you for the $3,000. Wait till you get assessed, and then we'll do something accordingly, okay? Then they charge him a little bit more money, okay? And what they did was they did an analysis for offer and compromise purpose. In other words, what they were doing, Dave, and you know and I know that, they were churning. And churning, folks, is that you are paid lots of money, and even though there really isn't any work to do, you create work that doesn't mean anything, okay? So they had him put together something called a 433A, which is for collections. It's a collection analysis. Now, Dave?
You don't do the collection analysis until you've been assessed.
Right. And you do 433As 3, 4, 5, 10 times a week, because that's the nature of the Gartland Group. So what happens is that $9,000 he owes legitimately. They do an analysis to say that he has an open examination. Then to create paperwork, they do an analysis for something called an offer in compromise. Now, in an offer in compromise, they have determined, by the way, that, and our next segment we'll talk about this in more detail, but when they did the offer in compromise calculation sheet, now remember, the offer in compromise is based on doubt as to collectability. The person that put this sheet together from Taxmaster said his total equity was $495,480.
He ain't going to qualify for an offer in compromise.
He ain't going to qualify for an offer in compromise.
He's got enough money to pay his $9,000.
Right. So, ladies and gentlemen, when we come back, we're going to tell you more disastrous information on this particular case. So, when we come back, we'll talk about Tax Masters and this client and what he should have done.
Hi, I'm Al Geiberger. As Mr. 59, I can teach you how to get out of trouble on a golf course. But when it comes to trouble with the IRS, I can't teach you a thing. That's why I went to someone I knew I could trust, Bernie Gartland and the Gartland Group. After seeing how they solved my IRS problems and handled my tax preparations, here's my tip from Mr. 59. Don't take your tax returns to anyone else.
facing bankruptcy have led many people to believe it was the end of the line, when in fact it was their doorway to a new beginning. Hi, I'm Bernie Garland. For a full explanation of what a Chapter 7 or a Chapter 13 bankruptcy is, call me today for a free consultation. Hey everybody, Bernie Garland. The name of the program is Taxes, the IRS and You, and presented by the Garland Group, which consists of David Wiesen at Garland Law, and Brian Bauer
American Tax Centers,
and Kathy Satter
at Griffith Bookkeeping.
So we're talking about a client that came in to see us, that J.K. Harris type of organization, Ronnie Lynn Deutsch type of organization, American Tax Relief Organization, but this was Tax Masters, the same thing. They're all four the same, and they're all out of business, fortunately. And what happened is, and I'm going to be very brief because we've got some other things we want to cover. This is almost laughable. This is the Tax Masters letter of retainer agreement. They charged for personal consultation for federal $500, personal consultation for state $250. He didn't owe anything to the state. Okay, final notice of intent to levy $5,500. There was no intent to levy. There was no final notice.
So right now he's up to spending more money than if he just paid the IRS $9,000.
Exactly.
Because if he had the three plus the $5,500 and the $500
and the CP2000 is only a proposal that he could answer. And then the last one is the 433A financial agreement, $1,500. There was no need to do a financial analysis because the man had over $400,000 equity.
Right.
Okay, so what happened is they ripped him off. And what they did was that eventually, because of their procrastination, Dave, the IRS issued, and I'm going to show you this. I won't show it to the folks because this is an IRS. They issued him a statutory notice of deficiency for the amount owed. This should never have happened. This means that he would have to petition tax court.
Right.
Okay. For something he owed that he acknowledged that he owed.
They should have looked at that CP2000 and said, did you owe it? Yeah. Did you forget to do it? Yeah. Done.
Okay. Wait a minute.
That's what they should have done.
We're getting ahead of ourselves.
Right.
Okay.
Well, they're not done with him yet.
No, they're not done with him yet. Okay. Now they say to him, supplemental engagement agreement. By the way, this is what these people do, the National Sales Organization. Preparation of an amended tax return 1040 with a Schedule C. What's a Schedule C?
Business.
He didn't have any business. He was retired.
Sole proprietor. How you doing?
$650. A preparation of amended individual state of California. $650. Okay? Schedule C. He wasn't even in business. Okay? So you see how all of this shows you how these people work and how they are creative in ripping people off. He didn't need to do any of this.
Right.
Brian, you and I talked about this a lot. If this gentleman came in and said, I don't know what this is, and you and I look at it and say, well, Mr. Client, it shows that you got a distribution from this company for over $40,000 and you did not include it on your tax return. And then this is the amount of money that the IRS is saying that you owe.
Right.
And the question, Mr. Client, is,
did you get it?
Did you get it? And if he says yes, then we say, well, what we'd like to do is see a copy of your tax return so we can calculate out
if that tax that they're proposing is accurate.
And guess what? In this case, it was.
Right.
Okay? And then what would you say to the client?
We would say that he should sign that and agree to it and either pay it in full or work with the IRS to get into some sort of payment plan.
And normally, in our firm, we would either charge him $100 or nothing.
Right.
And look what he went through with, and by the way, when he got that statutory notice of deficiency, it was because that the client and his representative were not communicating with the IRS.
Right.
And that's what he found out. They said they would contact the IRS, and they never did. And it resulted in a statutory notice of deficiency, which says you've got to file a tax court petition within 90 days, and they add on additional penalties for not doing things properly. All he had to do was sign this because it was accurate, pay the money, which he had the money,
Right.
and it would have been over.
And that's just one example out of thousands.
We see it all the time.
Right.
Okay. I want to segue into something. Those 4 people are out of business. Okay? But we have a whole new bunch of new people that are doing the advertising, and it seems to be that the same underlying machinery mechanism is what we're now seeing on television. Now, I cannot tell you whether or not, because they're new. We don't know how many complaints. We don't know whether the attorneys general of different states are going to investigate. We don't know that, okay? I suspect they will. But we do not know whether this new breed is legitimate, okay? Time will tell. But the purpose of this show today, this program, is to alert people that there is a tendency for these national sales organizations to rip people off, okay? You have to understand something. They cannot give legal advice. Therefore, you have about 7 different options when the IRS comes after you. Now, we did a program on that 3-part problem-solving process, okay? And the last part of the problem-solving process is to outline the 7 different options. These national sales organizations cannot and will not do that. So, therefore, you all out there do not get total accurate information on how to solve your problem.
They don't get all their options because they're not lawyers. They don't have lawyers there.
And that is why American Tax Centers has joined with Gartland Law and with Griffin Bookkeeping to become under the umbrella of the Gartland Group, so that all of this information is like you had said many times. Somebody comes into your office, they end up owing taxes. You can't give them legal advice.
Right.
What do you do?
I walk across and I either get you or Dave.
You walk across to get legal
and
advice.
You consult with them free of charge and say, here are your legal options. Brian's given you these other options. Now here are your legal ones.
Right. And another thing that I think is very critical when you're analyzing whether the people you're talking to is someone you should sign up with is find out, is the person you're talking to a salesperson?
Right.
Or is that the person who's going to actually
be
handling your work? When we interview people, we have what you call eyeball-to-eyeball contact. We go, hey, this is Brian. He's going to be preparing your tax return. This is Dave. He's going to be negotiating with the IRS.
Because we're local.
Yeah.
We're local. And the thing of it is that you're right. You're absolutely right. If the public has to call and ask questions. Are you the person that's going to be handling my case? Are you going to represent me in front of the IRS? And are you a lawyer or not a lawyer? And what options do I have? Can you give me all the options, or are you allowed to practice law without a license? You can't do it. That's why I know this is very self-serving, but the general public needs to come to get free consultation from all of us at the Gartland Group. We're here to give free consultations. So I want to take this opportunity to thank you for tuning in and watching our program. Brian Bauer is here from American Tax Centers. He's one of our resident panel members, and David Wiesen from Gartland Law. Kathy from the Griffin Bookkeeping is available also. Give us a call. You have a tax problem, a consumer debt problem, foreclosure problem, give us a call. We give free consultations. This is Bernie Garland. Till next time, thank you very much.